Hello, everyone, and welcome back. We are back for the market close and some earnings report reviews. We have some big ones, some very, very big ones, actually. Palantir, HIMS, MercadoLibre, Axon as well, but I'm pretty sure that a lot of the focus is on Palantir. There is someone asking here the right question in chat. Who is buying Palantir at $160 right before earnings? I don't know. But we'll see what they report. Jose, how are you today? It's been since Thursday.
Yeah, I know you missed me a lot, Neil. So I'm sorry we've been away for so long. I'm happy we're back. Hopefully you're feeling a little bit better. And yeah, big earnings this week. I mean, obviously today we're starting with Palantir. Also, maybe some. There are a few semiconductor companies that are not that popular that reported today. Maybe we can look at them as well. But more and more, I'm more excited for tomorrow, Neil. Right, tomorrow is going to be a nice, fun day for investors in general, but definitely a lot of cool names happening today.
Yeah, tomorrow is the day. Tomorrow is the Advanced Money Doubler Day. We're going to stream the whole earnings for that one. But yeah, today I'll pull up the heat map because Friday we didn't stream, and Friday the whole market crashed. So now you guys know. Whenever we don't stream, that's what happens.
That's what you get. Yeah. So make sure you keep us in here.
Exactamundo. Yeah, so today it looks good for now. Today we are looking quite good. Navitas is also reporting later. I mean,
yeah, that one's pretty interesting. Well, I actually haven't seen the market today, but I've been pretty busy here. What's going on, Matt? And everybody, hello to everybody watching. Nvidia up 3%. Meta up. It's a nice day here.
Yeah, I mean, if we look at our watch list today, our bet, Roberto is in the house here, so he's also quite happy. Applied Digital up 10.6% today.
Nice.
Pretty good. Iron is up, Hood is up, Nebius is up. Sorry about that. Palantir is up 4% going into this earnings report. Oscar is up. That's something new for you, I think. Hearing that Oscar is up 3.6%.
You know what's new to me, Neil, right now?
Mm-hmm.
Google is up. Is Amazon the new Google now? Is Amazon gonna be you're losing in AWS and it's time to pound on Amazon instead of Google?
Google is up and PayPal. Crazy. And Intel. What the heck is going on here? But yeah, Amazon is down. Apple is down, so I think that's fine. I think that's fine for now. Um, let's actually look at
Marco says it right. We're all rich today.
for now. For now. Um, but yeah, Palantir reporting. I mean, the thing with Palantir, what's crazy is the 200-day moving average is at $103 or so. So even if you crash 20%, you're not even going to reach it. You have to crash 35% in order to reach it. Um, it does have a very, very nice cushion. Like the stock has gone up so much that even if it does crash 10%, 15%, whatever, you're going to go back to prices not seen since what, a month ago or something like that. I made the prediction. I think they'll report revenue close, very, very close, if not at $1 billion for the quarter. Guidance for next quarter is probably going to be $1 billion. And then full year guidance should be raised to 4 billion at least, in my opinion. But we'll see. $1 billion for this quarter is a very good quarter. I think just above 40% year-over-year growth. But the next two quarters, Q3, Q4, should be $1 billion quarters based on the guidance that they already gave us. If you calculate Q1, you calculate the expected Q2, Q3, Q4 are going to be $1 billion quarters. Now you're going to tell me, yeah, but I mean, that's the least what we should expect from a $378 billion company. And I'd say, I agree. I agree.
Yeah. What else? We have some comments here. We have Lisa in the house saying that's crazy. I don't know if she's talking about Palantir here. We have Palantir needs to go back to 60 to be a nice investment. Neil, for certain stocks,
I
what do
agree.
what do you think? All right, you agree. What do you think would have to happen for something like that to change? Um, is it more like a whole market reset? Because how would you see what would create kind of this sentiment shift out of Palantir out of nowhere? In your thoughts?
I mean, a market shift could lead to it going down much, much faster, for sure. Now, to reach 60, you have to go down quite a lot, right? Let's say we go down to the tariff crash here, which was in April. Stock would have to crash around 60%. Now, we've seen stocks
That's
crash
wild. Yeah.
60%, right? We've seen the
It
United Health and all of
yeah.
that, but there were reasons for it. I don't think that not growing 40% is going to be a good enough reason. It's going to be a good enough reason to pull back a little bit, but 60%, that's quite a lot. And so, yeah, maybe we'll never see 60s again. Maybe the market will pull back as a whole, and that will drive Palantir stock down. Maybe people will say, look, there are many other worthy investments right now. Why should we go with Palantir? And then, like, when things start falling with Palantir, things can go down quickly, meaning 3 months, 6 months or so, stock does nothing but fall and consolidate. Could happen. But I don't think the reason is going to be, oh, the company is now only growing 10%.
Here we go. Someone says a possible replacement for Palantir from another company, and it drops to below 100 real quick. The bigger they are, the harder they fall. We're getting some questions here, Neo, on Navitas, Tigra. Yes, they do report today after the market close. Any feedback on this one? I did do a video on it last night. My biggest thoughts and fears is I hope the market is not expecting a lot from Nvidia's kind of partnership anytime soon. Any type of that revenue is not expected till 2026, maybe even 2027, because it's mainly meant for the Rubin platform. And the Rubin platform doesn't come out. We still are just releasing the Blackwell, so Rubin is next year. And actual ramp production of Rubin is it's even longer than that. And if you look at this company, I don't know if you want to pull up fiscal.ai real quick, Neil. We can kind of. This is a company that hasn't been growing in revenue because most of its market is pretty much like on Semiconductor and some of the other stocks in that similar space where it's been very dependent on the EV space. So the EV market has been completely weak. If just let's just take a closer look at maybe quarterly revenues, real quick, Neil here. Um, And so yeah, I mean, you could see this nice dip on revenue since December of 2023. A lot of their business did come eventually from EV markets. The data center market is kind of starting to pick up slowly but surely. But that NVIDIA partnership is not expected to really happen until at least late 2026. So the biggest thing is, I mean, it's a small company, $1 billion. So I do believe some stuff like this could run a little bit, not just on, um, could be moved somewhat by retail. I mean, not crazy, crazy, but some sentiment. It could definitely be a sentiment play. And it's crazy how many questions I get into my videos like, what do you think the revenue growth is going to happen with Nvidia this quarter with Navitas? And it's like, I'm pretty sure it's non-existent. The only bullish sentiment that I would say is if Navitas management talks a little bit more about it, of like, hey, look, this partnership has become a lot closer. We're working day by day, week by week with Nvidia. The success rate is getting like 90, 95%. If you hear maybe some improvements or some bullish sentiments, I do believe that could continue to create this bullish sentiment. But even if we look at estimates, I want to look at, if we can kind of look at estimates here really quick, and just revenue on a quarterly basis, you don't expect much growth here. Most of the growth is actually expected to happen in late December, where they do have kind of a new data center power solution entering the market. This is not the NVIDIA 800 volt. I think anything after December is very hard to predict, but I think December of this year is still not that crazy. So I would ignore anything after that. But up to December 25th, that's where you at least expect some strong revenue growth due to the data center market. So if guidance can kind of talk a little bit more about the data center space, then I think there's bullish sentiment. But my biggest worries is how much is the market really expecting from NVIDIA this quarter? And if it's a lot, I don't think investors will have a good time.
I mean, this is a company worth 1.5 billion, generating $74 million in revenue. So cheap, it is not. Cheap, it is not. Expectations are probably quite high.
Yeah. And I mean, it kind of makes sense. Even if it is a competitive market, if you are a $1 billion company and if you get a few scraps from NVIDIA, you can definitely reach even the competitive landscape where it's probably around 20, $30 billion, where that's where some of its peers are fighting. It kind of gives you a little bit more of a leveling field. But I don't think that's going to happen just yet. I feel like long term, there's definitely a reason to have some excitement for the stock. I think in the short term, if you're just banking on Nvidia, I don't know if that would lead to a good time.
Agreed. When can we expect the earnings for Palantir to come out? I believe it's right after the close, maybe just 15 minutes after that. For those that don't know, the number expected for revenue is $939 million for the quarter. I do expect Palantir to beat that number quite comfortably. Question is it going to be above a billion or just below $1 billion? And even the quarter after that, consensus is still not $1 billion quarter, which is quite strange to me. But yeah, we'll see.
Wait,
We'll see what happens
how
with this one.
how close? What was your you said you meant you made a prediction? What was your prediction for this quarter?
I think Q3, Q4 are definitely $1 billion quarters. This quarter is going to be either $1 billion or very, very close to it, meaning 980,
Blah blah
$990
blah.
million,
Yeah, 90.
something like that.
Got it.
But yeah, I mean, if we're being honest, for a company like this, you have to put up the numbers, right? It's $370 billion generating $4 billion a year. Even if you are growing 40%, someone said here, how many years in the future are you paying already today? A lot, I'd say. Quite a lot, to be honest. Adobe is, I'll first show Figma, because Figma is taking a hit finally. It was
Finally,
down.
it's been it's this is only the second. Is it a second or third trading day, Neil?
Yeah, but I mean, it was supposed to open at 33. It went to 100 and something. Now it's down 26%. Makes more sense, but still very, very expensive. Now, I would have thought that Adobe would have gone up a little bit based on Figma's pricing, but nope.
Oh.
Adobe is still getting hit, despite Adobe actually expected to generate dollar amounts more than Figma for the next coming years, which is crazy to think about it. Like, yes, Figma is growing faster, but dollar amount generated, Adobe will generate more dollars in the upcoming years than Figma. But yeah, I don't make the market. I don't. I don't make the markets.
We do have some questions on HIM's expectations, Neil. I don't know if you
Mm-hmm.
want to pull that up. In the meantime, there were a few questions here on Semiconductor. On Semi is another semiconductor company that reported earnings this morning. I haven't looked at the reports just yet. Someone asked if I might do a video. I might cover it in my video today, just kind of give a top level overview. But this is a company that's more in power solutions for the automotive space. The embedded market for, and I know this person is a nice AMD bull, so they're kind of curious. I'm guessing more of the embedded market for AMD. The embedded market is broken down into a lot more than just automotive. I mean, you have the aerospace and defense. You have any type of industrial play as well. So I don't know what On has said, but On is just more focused on the automotive space. So it's not going to be a true confirmation of how the embedded market is doing. But maybe we can get some bits of information. Hopefully, I can provide more information on later's video.
We've got Martin here in the house. As for HIMS, for those wondering, consensus number for revenue expected $552 million for the quarter, which they'll report, I think, in about 30, 40 minutes or so. EPS, 16 cents, and free cash flow of $63.5 million. For HIMS, right now, the company is worth around $14 billion, give or take. It's expected to grow revenue compounded for 2 years, 38.6%. EPS around the same 37.4%, so still expected to grow quite rapidly. Average analyst price target sits at $48 at the moment, and the price we're at right now, it's 62.8. It's going to be interesting to hear comments on GLP-1s, the compounded drugs that they offer, especially after the Novo Nordisk saga. So I think that's going to be interesting. All in all, the platform should still be doing okay, although there were some data points that came out that I think either downloads or website visits went down last month or so. So we'll see. So we'll see about that for HIMS. But I mean, this is a stock that has performed extremely well year to date, up 150% of the last 12
Do you
months.
own this one, Neil?
No, I do not.
No.
I used
Okay.
to, but I do
Yeah.
not.
How about
But
the
yeah,
other one? Nova?
Novo,
No, you don't know.
Novo
No
Nordisk.
Novo? Yeah.
No Novo at the moment, although I mean it's tempting, but I already have United Health and Oscar as a health exposure. Although I mean it is very cheap. It is very cheap. It's still a company that is growing. It's just that right now guidance has been revised down. So yeah, if guidance is revised down, it's not growing as fast as previously expected. So it's more expensive today than it was, let's say, 2 weeks ago, because, well, now earnings and revenue are growing slower than before. But even with that, at current prices, current growth rates, which are definitely not wow for now, it is tempting. But then again, you cannot buy everything. So I'm going with United and Oscar, and I think whoever goes with Novo needs patience, but there is definitely value to be found. But don't expect a V-shaped recovery with this one.
Nice. We have a comment here, Neil. Why the hell did I sell Broadcom at $80? Haunts me every day. There were some news today. I haven't seen floating. I haven't confirmed if they're true.
Wow.
Um, but
Or Meta.
Broadcom, yeah, the Meta news. That Meta is pushing on with their MTAI. I don't know if it's Gen. I'm pretty sure it's Gen 2. Um, and building some massive clusters with that. So Broadcom's definitely doing pretty good.
It's crazy that it's close to $300. It's nuts.
What's his market cap right now? Is it close to 2 trillion? 1.4.
Yeah.
Pretty impressive, to say that. Yeah, pretty impressive.
Do you think it's price to perfection?
I think so. I mean, I think, I don't know. You just have a lot of competition in this space. And any hiccups, any other players try to take kind of like your ASIC wins. Not only Marvell, but you have a lot of Asian-based players. But it's been killing it. I mean, what's his name? Hawk Tan is,
Octane?
I think it's,
Yeah.
yeah, very serious CEO. I feel like if you work on his team, you don't mess up. You or I don't know. I feel like he'll take you down or something. He seems scary. He seems like a scary CEO that seems to be working.
Yeah, he's a man on a mission, for sure. He's a man on a mission. Let's see. What else do we have? We have Meli reporting also after the close. I would be surprised if the stock does not react positively. It's one that rarely disappoints. It's not a cheap name, but then again, you're paying a nice premium for a company that kicks ass, that is growing the company very, very rapidly. If we look at what the market is expecting them to report, revenue $6.66 billion, EPS of $11.75 for a company that is worth $120 billion or so, growing 28%, EPS growing 33%. I mean, this is one of the easiest holds I have for many, many years. Many years to come. Good one. I like this one. I laugh at my own jokes. Um,
I laugh at you laughing at your jokes. That's what's funny. Not the joke itself.
but me.
Neil, Reddit is still killing it. I think it was up another 6% today. I don't know how Friday went. I was off Friday. I heard it was a scary day on Friday.
Seems to be
Nope.
doing fine,
Yeah, it seems to be doing. Yeah,
making its
that's
way to $200.
pretty wild.
I mean, it makes sense if I mean we looked at the quarter, very good quarter. They've got momentum, so it makes sense for it to go and grab even more momentum at the moment. Exactly,
You can't
I
laugh.
agree.
Exactly. You have to be yourself's number one fan.
I am, I am. With AMD for tomorrow, it's interesting. Yeah, I'll touch on Nintendo in a second. We've had like the stock go up, pull back a little bit, go up, pull back a little bit, go up, pull back a tiny bit, and tomorrow is earnings. Which way do
Bong,
we
bong,
go,
bong.
Campton?
Lisa, are you gonna guide us the way higher or lower?
Yeah, Lisa, you have to give us at least a sort of a figure that is calculatable, right?
Mm,
Like
yeah,
at we expect
I
to
don't think
double
she is.
last year's revenue. That would be good
I,
enough.
yeah, I don't think she is though.
Then down we
I think
go.
she, I think she's gonna wait at least one more quarter because this is gonna be the quarter of you got both. You got a lot of uncertainties kind of coming out from this quarter. You had this is the actual ramp up quarter of the MI350, right? So it's only been a little bit there, and then you also have the reinstatement of being able to license to sell to China. So while that wasn't in this actual quarter for AMD, it will impact kind of guidance. So I think Lisa Su, with her maybe a little conservative self, might wait at least one more quarter before she gives us anything.
So we buying the crash. We're buying the crash. Um, yeah, the 200 days sits 26% lower than the price we're at right now.
Um, and France broke it down a little bit. I know we were talking about Broadcom. Broadcom is after that acquisition of VMware is
VMware.
definitely now more of a software company, but that's what most semiconductor companies are trying to go nowadays. I would definitely love to know more about that VMware. Is it more of a software company or is it more of a clouding company? If it is more of a clouding company, that's actually pretty exciting, as we kind of saw those comments from AWS CEO that I forget 80%, 85, some crazy number percent of the money of IT spending is still in premise opposed to on cloud. So that's just, in my opinion, very bullish for the whole clouding space in general.
The counter argument is that maybe companies would just like to stay on-prem. And so you'll have to bring AI to them instead of them to the cloud. Because this is also something that Andy Jassy has been talking about for a long, long time, right? That over 80% is still on-prem. So there's a long, long way to go. But then some other companies are like, you know what? Actually, maybe some companies for security reasons and all of that would like to stay on-prem. But yeah.
Yeah, I mean, I think there's at least maybe with the current AI push that if you are generating, if you have this annual cadence, if you do have on-prem, unless you have this nice amount of capex, you're not going to be able to keep up, and it's probably a lot higher. A lot higher than it was just 5 years ago, where 5 years ago you could probably skip a generation or two before maybe upgrading into a little bit more. But I wonder if you're really pushing in the AI space, it's going to push you for more in the cloud space, since you don't want to continue to reinvest that capex dramatically. But yeah, I mean, I think Google partner up with Nvidia so they can be able to sell servers for on-prem solutions, and you can be able to run Gemini locally instead of having them on the cloud.
Yeah, I mean, Google is killing it recently with their announcements. I think they're gearing up for some good Gemini announcement pretty soon. In case ChatGPT comes out with GPT-5, they've also released like a nice, fun video about the upcoming Pixel 10, basically taking a hit towards Apple.
Was that actual real? I didn't know if it was real. Because nowadays with AI, it was real. Okay, it was an actual one. Nice.
Yeah.
I load.
Nebius reports Thursday. Too early for you to join at first, but I'll go live. I think it's 7 a.m. your time. I don't think you'll be awake that early, but I'll
7
take the
a.m.
hit. Yeah.
For Nebius, I'll be here for Nebius.
Okay, so you heard it here first. Nebius, we're going to have actually 2 guests, I think, for Nebius. I do expect a pretty good quarter revenue-wise. Don't freak out when you only see, I think, 100 million or something like that for a company that's worth $12 billion or so. It's all about making sure that the ARR is still closer to $1 billion, and that commentary for 26 is that, well, we expect to have, I don't know, another. I think
pull up the heat map real quick, Neil. We closed
a gigawatt or so.
So we have 2 other guests coming on.
Correcto. Yes.
Jeez,
we have one that I know, and the other one I have no clue who is, but the more the merrier.
Just have open invitations around here, Neil.
The more the merrier. So yeah, we are closed. Ding, ding, ding. Warren Buffett is down. Warren Buffett is down 2.9%. He doesn't participate in AI, and neither does Amazon, apparently.
Yeah. All non-AI companies are down. So we have Adobe down, we have Berkshire down, we have Amazon down. Makes sense.
Yeah. Apple could have participated if they were down here as well. But yeah, no, all in all, I mean, pretty good end and pretty good start of the week. I mean, Nvidia being up 3.6% is quite something. Meta, Google, Microsoft all up. Palantir closed the day at $379 billion in market cap. So we'll see what happens with that. If anyone has numbers for Palantir, MercadoLibre, HIMS, do let us know in the chat below.
And Roberto here coming in with some clutch knowledge here. He works in enterprise IT and could tell us that eventually everything will move to the cloud simply because CIOs like to have someone to blame. If there is downtime, they can just point at the vendor. Very, very true.
I mean, it makes sense until you replace everyone with AI. Who are they going to blame?
And what we're waiting this morning, any earnings outside of, I know On Semiconductor from the semiconductor space, but any earnings you were interested in this morning, Neil?
To be honest with you, I've been in bed the whole day, so no clue. No clue what has happened.
Yeah, it was a trick question. I was just wanting to make sure that you didn't leave me this morning to do something else. So I was just
I
double
wish.
checking.
I wish. I don't know how that fever came back, but it's pretty annoying.
People are saying if you could show Palantir graph while we wait. MercadoLibre supposedly falls 7%, but sometimes I don't know if to trust people in this chat. I don't know if
Palantir
you're
for
trustable
now
people.
doesn't move. Meli, oh, Meli did move. Meli did move, and he's closing in on that 200-day moving average. So I guess we've got some numbers for MercadoLibre, and yeah, it is EPS of a miss of 13 cents, a revenue beat by 2 cents, it seems. So we'll see what happens. We'll see the numbers in a bit. Apparently, Navitas is also down a little bit.
Did they report anything yet?
What about HIMS? HIMS no move. So I guess the only one that came out is MercadoLibre. So let me check that real quick. MercadoLibre. AMD hitting $200 by December. I mean,
it's not impossible.
It's not impossible. It depends again on that AI revenue guidance.
Yeah. Will it scare me if they don't give us actual guidance and it's just a pure hype move? Maybe for the short term. I mean, I'm still a very, very firm believer that this is a multi-bagger. Even though sometimes it'll look like it's not. After hours, Navitas is down 15%.
Oh my God. Well, MercadoLibre's website earnings is service unavailable. I didn't know so many people were interested in MercadoLibre. Service unavailable. Why is it unavailable?
Abraham, I will send Navitas a nasty email if they don't go green tomorrow.
No, still nothing for MercadoLibre's website, but let's see if we got some people on X.
Yeah, I'm trying to check maybe the Navitas report anything. We have Meli numbers. Did you talk about that? Palantir numbers came out. Earnings per share of 16 cents, beating expectations of 12 cents. Revenue of $1 billion, beating expectations of 900.
I was correct.
Million.
I was correct.
Now, what you should do now, Neo, every morning you go to sleep, you tell us what to expect, and then we play on that for the day.
Damn, I'm so good. Wow.
What did the market react to it, Neo, or was it already expecting kind of this beat?
We're up a little bit to 164, so up 4% right now. Up 4%.
Want me to check CNPC if there's anything?
If there's someone, yeah. I mean, Palantir's earnings goal is going to be like a half an hour tops because they're
it's really short.
Because there are only 2 analysts coming. Maybe this time there are going to be more, but I mean, the last 10 times there were like it was Mariana from Bank of America, Dan Ives, and that's about it.
Do they get more than one question each?
I think 1.5 questions, but Dan Ives' question has always been about conversion rate, and he never gets an answer. But he says, oh, "Okay, thank you guys, great quarter."
Got it.
But yeah, Meli stock is down, and so is their website. So goes hand in hand.
Yeah, you want to pull up Palantir slideshow seems to be up, I think.
Let me do that. Stock is still up around 3-4% or so. So Palantir is up.
Palantir.
Okay, I mean, that's quite crazy. We're of 40 enterprise software companies with over $1 billion in trailing 12 months revenue. Palantir is here at the top at 94%. That's quite insane. Okay, so this is way too much. Let's see if there is more. Okay, better. So US commercial revenue up 93% year over year and 20% quarter over quarter. That's pretty good. Commercial customer count up 64% and 12% quarter over quarter. Remaining deal, whoa, okay, that accelerated. US commercial remaining deal
that's very
value
crazy.
up 145, up 20% quarter over quarter, 2x increase in US commercial deals closed of $1 million or greater, 5x deals 5 million or greater for US commercial, and then the TCV, total contract value for US commercial, at $843 million. That's just tell the haters, read them and weep. I mean, yeah, that's a very good. This is crazy. The rule of 40 of 94% is insane. That's crazy. US revenue grew 68% year over year and 17% quarter over quarter. Acceleration in US commercial and US government. Not surprised that US government is killing it here as well, up 53%. But commercial this time up 93%.
Yeah, that's wild.
We'll soon be able to see this much better on fiscal.ai. Just to show you the growth rates, the continued growth rates. That was pretty crazy. Commercial revenue up 47, government revenue up 49. A lot of people just focus on the commercial side of Palantir, but the government side of things have been growing faster, and that's bigger. It's $553 million, while commercial is $451 million. So very, very impressive growth. Oh, what is this? It's a fly. But yeah, insane.
That's a lot.
I mean, yeah, for their business, it's not great. MercadoLibre, I can maybe understand a tiny bit, but still, for Navitas, maybe not so much. Let me see. Okay, customer count is up 43% year over year, up 10%. So
10% quarter over quarter.
Yeah, but it's
I know why I kept saying it. Yeah,
it's trailing 12 months always ending.
Oh,
those
nice.
numbers.
Oh, okay, that's even better then. If you're seeing a better growth compared to the one, that's actually pretty good.
Zooming a tiny bit more. Voilà. As for commercial, that's growing faster than overall customer count, so that's good as well. Let's see, 157 deals of at least 1 million. Well, that's way more than last quarter, I think. 66 of which 5 and 42 of at least 10. Let me actually check last quarter, because this is, I think it was, let's see, presentation, slide 25, so it's approximately the same. Let's see. Yeah, okay, so in
Q1
Q1,
slide in a bit.
In Q1, they closed 139 deals of at least 1 million, 51 of at least 5, and 31 of at least 10. So yeah, in Q2, doing much, much better. Much, much better than that. They ended with $6 billion in cash equivalents, which is $600 million more than last quarter. And as for guidance, I predicted this as well. I'm so good. Damn, I'm so good. Tap on my own shoulder here. So Q3 revenue of just above $1 billion, 1.08 billion. And then guidance for the full year has been raised. Makes a lot of sense. 4.14 to 4.15 billion dollars for the year. US commercial revenue in excess of $1.3 billion, representing a growth rate of at least 85%. Pretty nuts. But yeah, this is the growth rate that you need to see from a company that is trading at such a high premium, for sure. But yeah, I mean, I only have one share now. I only have one share of Palantir, but even with one share, I can predict much better than Wall Street. Let's see what RPO does for the quarter. So last quarter, 1.9 billion. We're now at 2.42. Nice increase for long-term RPO, going from 1 to 1.4 billion. Billings at 905 to 1.1 billion dollars, and net dollar retention rate of 128, which is better than last quarter. Last quarter, that was 124%. So this number doing much, much better. I remember the times that this number was 107, 108% or so. Kept going down, wasn't good at all. But yeah, overall, this is revenue excluding strategic commercial contracts, was when they invested in some SPACs and whatnot. So still pretty good. Excluding those, you're just under $1 billion in revenue. What was the slide you said was
They had I think we're gonna keep going. They had like a FO4 rule, or maybe we passed it already. It was like the few companies that are like 80% in the rule of 40 thingy.
I think that's up. Let's see.
Oh yeah, there we go. Yeah, the rule of 80 frontiers. So zoom in on that a lot, Neil.
Yeah, top 25 market cap.
What's that all the way up there? Can I just zoom in a little bit higher?
This one?
Yeah, no. Oh man, Nvidia, that's wild.
And Navitas? Is that Navitas?
Navitas. Hey, Roberto's trying to say he's sorry about my solo yellow. We are stronger together. Roberto, I don't know if you missed a few streams ago. I did mention I was out of this one. So no need to be sorry about that.
About what? Which one?
Navitas.
I thought this was going to be an interesting one for you.
Yeah, I mean, Nvidia is up there.
No, okay. Nvidia, yeah. But yeah, this is cool. Let's see if we have the letter. There is there's usually a Alex Karp letter. Let's see.
That's the million, billion, trillion dollar question. That's wild. Over 100 companies report after their close today. That is crazy. Which are the best today alone? I wonder what tomorrow's going to be like.
Yeah, I wonder what's the average per day during earnings season.
I think this week is probably one of the busiest weeks, and it's not because I read it on FinTwit or something like that.
I can't find the letter, so maybe it's not out yet. But yeah, the stock is still up, which makes sense. MercadoLibre is down, but recovering a little bit. I guess that's what happens when people can't access the website.
HIMS is down
10%.
Well, I don't know. Is it down 10%?
Yeah, so let me
Nice,
maybe pull
nice.
that. Nice. Thanks. Shareholders are
Oh,
thanking you.
did I say nice?
Viewership declines. So Jose said, I'm losing money
Nice.
on him. She's like, nice. Thank you very much.
Well, more
Um,
like nice. Oh, that you were keeping up with the information. I was trying to see what else or what other earnings we had.
let's see. Revenue was a miss. Expected number was 549 million. They came in at 544.8, but EPS did beat 17 cents versus 16 cents. So let me pull this one up really quick. Press release. Yeah, I guess because the presentation is not up. I know I said it last week, but I'll say it again. If you have a presentation, why aren't you releasing it with the press release?
Some people don't do that. That's why I showed that company.
Yeah. So this is HIMS. This is HIMS. I feel older listening to stocks. Yeah, I mean, sometimes we do talk about other things here, so you can feel younger. But yeah, HIMS subscribers up 31% year over year. Monthly online revenue per, it's basically the ARPU here, the monthly online revenue per average subscriber is also up 30%. Online revenue up 75, wholesale revenue down 10, but the majority of the revenue anyways comes from online. Let's zoom in here. Gross margin 76% compared to 81% same quarter last year. So that's a decline there. Should have an explanation for that. Net income 42.5 million compared to 13.3 million dollars same quarter last year. So nice little increase. No free cash flow for the quarter compared to 47.6 million dollars same quarter last year. As for guidance for the next quarter, revenue expected 580 million at the midpoint and adjusted EBITDA of $65 million at the midpoint, representing 11.5% adjusted EBITDA margin. Revenue for the full year, $2.4 billion. I don't know if that's revised up or not. I guess we'll find out pretty soon. Let's see. Q1. Same. Okay. So same number is expected for a full year revenue. Okay. We do have a shareholder letter, so there are some interesting things here to look at. Let me zoom in. Voila. All right. So all in all, revenue is up 73%, net income up 220%, adjusted EBITDA up 109%. So still quite a fast-growing company. But cash flow-wise, I don't know what happened there. Probably will get
What
an
are they buying?
explanation.
Nvidia AI servers.
Uh, what are they buying? I think no, maybe it was because of an acquisition of a factory or something like that. But all in all, here growing quite nicely. Personalized, okay. I mean, quarter over quarter, slow down a tiny
And the other one
bit,
declined.
and the other one declined, non-personalized. Yeah, but their whole like premise here is to have personalized
So it's okay.
plans.
Yeah.
So they rather increase the
So
personalized one
was
than
it
the.
pretty much flat then? Because it just converted from the other to the other.
Yeah, but
But then it makes it look like it's an uptrend, even though the math
yeah.
does the
So
same.
probably the like 1.5
Yeah,
something is higher than the
They
0.9.
should show that because that looks
Yeah,
pretty
this is
sketchy. At the end of the day, it's
deceiving.
2.4 at the same.
uh,
Short it.
I, I mean, Novo Nordisk wants to attack it because it's basically
They should use that.
stealing their research for compounded drugs, but oh, not the stories. Just give me the numbers. Where are the numbers? Bring precision medicine to consumers around the world.
We're looking at Hims and Hers right now.
Yes, real quick. Okay, so this is the growth rates. For next quarter, still expected 42 to 47% year-over-year growth. For the year, still 56 to 63% growth. So still a fast-growing company. Underlying themes for, well, I don't think they have changed much. Weight loss revenue of at least $725 million. I don't think that is changed from last quarter for him. So, yeah, I guess short GPU, long Planet Fitness. If it was so easy, but yeah, I guess commentary on the code is going to be a bit more important. Let's see.
Is Navitas website still down? Did it open report too?
Open door tomorrow.
Oh, okay. Because someone's asking, did y'all talk about open? Or we talked about it, Morpheus. You're part of this group as well.
No, tomorrow.
But
Today
we
it's
haven't
up
talked about it.
17%. So still making money on what's left. Still making money on what's left.
Yeah. Is Navitas website open?
No.
Investors relations website open?
Let's see. It's Q2, right?
It should be.
Yeah.
They were expecting somewhere around 14.55 million by analysts. Is that what they delivered?
14.5.
All right. Announcing increased focus. Yeah, I think that's still like a 28% year-over-year decline or something like that. I'm going to say I don't like this. Why is it different text in everything? Different text size.
First of all, who starts with delivered revenue of 14.5 million? Like, what is this?
It's like their intern forgot to get it up and running, and they were just copying from all over the place. They couldn't keep everything on the same font style. I don't know. Stuff like that gets me annoyed. It's something so simple where you could just keep a clean. Like that's important. That's why would that be?
Control C, delete this, and then you go here and you put Control V. And what a short. Short it. Let's see if they mention NVIDIA actually.
Yeah, right there.
Twice.
the whole press release. Every other sentence.
So NVIDIA selected Navitas for development collaboration to support next generation 800-volt data centers. Okay, so
I see that problem. Look at all this potential. All these potentials are by 2030. So stage 1, solid state transformers, creating market potential by 2030. Stage 2, supporting market potential by 20. Yeah. What is this one? Development timeline. Yeah. So just the development for each stage evaluations. So just design completion is not expected till 2027.
I mean, is this what we're expected to see from
I hope
a lot
that
of
person's
those players?
watching.
What is he using? Figma or Adobe? What is he using?
Using Copilot. That's what was your question, Neil?
Microsoft Paint. No, looking at those timelines here, I mean, we've talked about all of the other players, right, in the energy market / Bitcoin mining. A lot of them also have plans for 26, 27, probably 28, 29. So is this what we are expecting to see from all of the others as well? I mean, Applied Digital reported last week, of course, they're a bit further along with their plans. Things, we should already see some revenue coming in Q4 and then 26. But all the other smaller players, I would guess that we would see some similar wording.
Yeah, I would say I wouldn't read much into this, Neil, for like the data center players like your Applied Digital or those others, because the current solutions still kind of work. The current solutions are still somewhat efficient for racks up to like 200 kilowatts per rack. Right now, I think the like the black was like I think on average 120 kilowatts. So we still have some breathing room for the next generations. I think the biggest place or the biggest hurdle is going to be with the Rubin Ultra when it's like I forget how many GPUs connected. I think 512 GPUs connected in one server, and that's expected to get closer to like a gigawatt per rack. So that's when it's really, but we're still super far off from Rubin Ultra. We still have, we're still in the Blackwell Ultra, and we still have the Rubin platform. I was doing, Navitas mentioned it, that for like such portion like the Rubin Ultra, the amount of copper that you would need with the current landscape is like hundreds of kilograms of copper, which is insane. It's not logistically possible. Um, so I think right now I wouldn't really worry too much about the data center players. There's still plenty of Blackwell Ultra, and even the first Rubin that it really won't impact. I think, and you have a lot of already players working on something like this. We had On Semi. You had Texas Instruments. You have these guys working on this non-exclusivity partnership. So um, yeah, I think Navitas is like that moonshot when this comes out. But for now, unless in the earnings call they can say, you know what, we put 2030 for market potential, but by 2020, blah blah blah, we can actually expect some revenue. That could be a reason for the turnaround. But I don't know how shady that would be.
Okay, well, fair enough. We do already have some numbers we can look at on fiscal for Palantir for those that are interested in that. So U.S. government revenue, as we can see right here, we can put commercial here as well. So we see some acceleration in growth. This quarter, US government 53.2%. That's faster than the 45.3% that we've seen last quarter. Same with commercial here, 70% growth last quarter. This quarter, 92.2% purely from US revenue, which is, I mean, it's growing and it's accelerating, which is what you would expect again from a company that's worth so much. But they're delivering. So I don't think we can complain. As for total customer count, same thing here. We see last quarter it did decelerate a little bit. This quarter we're back at it, 43.2% year-over-year growth. I mean, that's pretty crazy. That's pretty wild for Palantir. Total commercial, let's see. We have total commercial customer count also increasing and accelerating for the quarter at 48.2%. Pretty crazy to see that this is already live on fiscal.ai. Link in the description for those that are wondering. What else can we see?
Yeah, Neil, here. I mean, I think also I do own a few Palantir, nothing crazy. So I'm not gonna act like I'm super excited with stock being up. But what I am excited about, Neil, that I can honestly say is seeing those customer growth counts, seeing it coming from commercialized, it does kind of give you that indication that we know one of the things is Palantir is an expensive software. So if you're paying for it, it's the market is seeing that there is a huge opportunity here, and that's mainly the AI space. So it kind of showcases the adoption of the AI industry. And that can be very bullish for a lot of companies that are really starting to get into the enterprise space. I mean, we did see kind of ServiceNow, I think when they reported earnings, they jumped up a nice amount of percent, kind of talking about the enterprise market. I don't know exactly what ServiceNow does as well. I know there are some form of consulting business, but the overall thematic that we're getting, at least from these results, are enterprise and businesses are adopting artificial intelligence. Now, if they are adopting artificial intelligence, it means a lot of things for companies like AMD and Nvidia. They're going to need obviously more chips because these people or these like Palantir or whatever, they're not going to be running. They're not the ones necessarily investing in infrastructure, but they're going to go out there to your Amazon, to your Google Cloud, to your Microsoft Azure to rent out space. And if you continue to see an adoption of AI, you're going to continue to hear what we hear in the cloud market, that there's just too much demand for AI workloads, for AI cloud compute. And this is the reason why the enterprise is waking up and is saying, look, we need to get into this AI wave. And yeah. Mm.
Yeah, I mean, spending is there, growth is there. Let me actually check for Palantir's call if it's already on or not. Maybe yes. As for questions about dLocal, I mean, no, Palantir's call is in 27 minutes, so it's not for now. It's not for now. I can pull up MercadoLibre real quick because their presentation is finally up. Finally. So what do we have? GMV up 17% year over year, and look at the difference between FX neutral and
Yeah, that
and
is wild.
I mean,
That is wild.
it's 40% on FX neutral basis or 17. It's that's
That is
nuts.
wild.
That's nuts. Adjusted free cash flow is a loss here. I mean, a loss is outflow of $10 million. So I guess, yeah, I guess I mean the small miss plus this, although they've told us that they are going to invest in the company, so it makes sense. I'm using AI every day for my work. It's a dream for knowledge work. But yeah, I mean, it makes your life definitely easier, for sure. Unique active buyers is growing. Q4 is, of course, a strong quarter. Here, actually, we have a little acceleration, 25% year-over-year growth, although Q1 was a bit weak. GMV still doing well across the board. Any big pullback, to be honest, to me is very much welcome. Is very, very much welcome. Same and next day shipments are up 25% year over year. I mean, this is basically an Amazon in the making without AWS. Um, without
Do you think they would
AWS,
ever enter into some form of digital landscape like that, Neil?
I don't think so. It's especially not now. Too late, in my opinion. I mean, to
Mm.
start building all of this, you are going to burn so much money for the next X amount of years, while still
What
trying to
if
dominate in
what if
back then.
like a Nebius of like Latin America comes out and they just buy it out? Do you think that would be not starting from scratch, but doing an acquisition in that space? Um,
Who's going to acquire who?
no, let's just say like a Nebius of like Latin America comes out. Like we know how Nebius is more for like the Europe and kind of expanding into the United States. But let's say there was a Nebius or a Neo Cloud that's appearing in Latin America, and Mercado Libre would want to buy them to kind of get into that market while not
Mm.
starting from fresh. How would you feel as an investor in that point?
I mean, again, I trust management to do the right thing. I just don't know if that's what they want to do. I think they with what they have right now, they can already grow so much without having a cloud business. So I don't know if the focus is going to be uh, misplaced, if that's the if that's the word. Because I don't know, I haven't heard them talk about it once. So I mean, they focus on e-commerce, fintech, advertising, logistics, and so I think that's big enough. That's big enough, and to continue to grow and dominate in a huge, huge continent uh, is better rather than now start with maybe an AWS. Because I mean, technically speaking, why would you do it? Right? Why would you do it if AWS, Google Cloud, and all of that already exists? Like, why would you start now?
Mm-hmm.
Is my question. So I don't think I to be honest, I don't even think the market would appreciate it. I think the
I would
stock would
appreciate it.
drop.
Yeah.
Uh, but yeah, all in all, here we have the fintech side of things. Monthly active users continue to go up. So yeah, I mean, I see nothing so far that would scare me, but needs to fire their investor relation web intern. Why you don't like the
Probably
color?
the same guy that is probably the same contractor that's as
Navitas
yes, Navitas. They hired from the same place.
from Fiverr. Okay, so commerce net revenue did come down. Yeah, but still some nice growth there. Do you have anything coming up here on your CNBC talking heads?
And any company you want me to look for? They definitely talk
Yeah,
about
if
a
they have
lot
some
already.
Palantir stuff.
Yeah, let me get some Palantir stuff.
Let's see what we got here in the meantime. Yeah, Meli is down a little bit, going to close that gap from May 20th. Yeah.
Did
from...
Axon report earnings today?
True.
Yeah.
Axon was also one that reports. It's up currently. I'm not surprised that they're also killing it. What did we have? HIMS. Let's see which HIMS sits at $57. So down a tiny bit here. Was it in 9% or so? Palantir still going up. Still going up a nice amount for 5%. The thing with Palantir is the numbers were great. Growth is accelerating. And yet it still remains very, 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 very expensive. But if they can continue to grow and accelerate, then the multiples, of course, will contract. But when you go from, I don't know, what was it, 200, 300 times? Let's see.
I'm going to share some screen, Neil, here on
250.
Palantir.
After notching an all-time high in the regular session, the company topping $1 billion in quarterly revenue for the first time, boosting its guidance again. I spoke with CEO Alex Karp, and he told me he thinks Palantir's performance can serve as a use case for other companies to adopt AI, and calls it a revolution of agency, meaning more radical output at a lower cost, saying, quote, every single business is going to look at these financials and say, I want to be more like that. And to do that, they have to absorb our product and also, interestingly, allow us to help them absorb part of our culture. Joining us now is Brent Bracelin, Piper Sandler's senior research analyst. He has an overweight rating on the stock. Brent, it's great to have you on. Want to get your initial take on these numbers, especially given the fact that it was a beat in the raise. And yes, we can argue about valuation, but they are growing at gangbusters rates, and not just on the top line, but in terms of profit as well.
Yeah, thanks for having me back here. I think the key answer that came out of earnings here is this is definitely more than a meme. You're talking about a business that's now had 8 consecutive quarters of accelerating top line growth. They guided this business to grow about 38% at the midpoint. They grew 48%. They're guiding next quarter to 50% growth. This is a company that just delivered north of 50% free cash flow margins, even at just $4 billion scale. So I think it really shows that Palantir is really uniquely positioned as one of those AI infrastructure winners over the next, and again, valuation's a little rich here, but again, very strong proof points tonight that the secular tailwinds are against our backs.
Is valuation rich if Alex Karp can pull off growing revenue by 10x over the next 5 years, which is what he told me he plans to do here, and he can do it largely on the back of the U.S. business?
10x is ambitious. Would love to see that. Ultimately, I think to underwrite the valuation and the multiple here, you are playing for the long term, right? And you can't play for the short run. The good news is the market is playing for the short run here. We've had multiple points here where the stock has pulled back. In fact, even with the beat last Q1, the stock was down 12%. So I think there's going to be opportunities to get more aggressively involved in Palantir. But these results are strong, certainly would suggest this could be a much bigger business than it is today.
So, Brent, even given your overweight rating, it's getting really close to your price target, I believe, 170 a share. What metrics did you use to decide on that 170 price target, and what will you look at when you're deciding whether to raise it?
Sure. We're looking at a business that we think can grow through 2030 at a basically 30% plus growth rate. They just guided next quarter to 50. So we'll have to evaluate what that sustainable, durable growth rate is. The upside this quarter came from enterprise. That was a business that grew 71% last quarter, grew over 90%. Pretty sharp acceleration in enterprise. How durable is that? More work for us to do there, but that was the big surprise. U.S. commercial, big acceleration there. Clearly, if they can continue that trend, that 30% growth rate could turn out to be conservative looking out through 2030.
All right, fair enough. Brent Bracelin, thank you with the stock, again, up 4 1/3%. Still ahead, AMD, OMG. Shares of the chip maker have more than doubled.
AMD, OMG.
OMG.
I like that.
Yeah, not bad. Not bad. I am looking here real quick at a reverse DCF for Palantir, because he said he modeled 30% until 2030, I think. If I am putting terminal growth rate at 4.4%, a discount rate of 9.88, just based on the implied risk premium and whatnot. Actually, let's remove this. 30% would give me $110 per share. To get 160, it will have to grow 35% for the next 10 years, every single year. Is it possible? I mean, they're showing us that it is for now. Can you do it for 10 years in a row? That's another question. That's another.
You know, it's such a weird thing for me, Neil. It's like I'm very heavily excited about kind of AI capital expenditure and AI growth and all that and all this. I do believe it can continue to grow at dramatic levels. We've seen kind of reports that CapEx is expected. But when it comes to software, for some reason, I'm not as bullish. And I don't know why. I feel like I should, because if you're spending that type of money on capital expenditure, it means you need to see that money inflowing from somewhere else in some form of use cases. And that's what Palantir provides. So it's funny from my end, right, to be bullish in one sentiment but not extremely bullish on the other, even though the other sentiment is what's going to be driving the demand for hardware. So yeah, I mean, this and completely noticed. Everybody suddenly forgot about the Advanced Money Destroyer. That name is done, unless Lisa Soup gives us reasons
Tomorrow,
to bring it back. Yeah.
You know, it's funny because every time I have to write advanced micro devices in the full article, automatically I write Advanced Money Destroyer. Automatically. And I'm like, no, oops. Nope, not here. Let's see. Yeah, so MercadoLibre real quick. Let me pull this one up from Brett, Stock Market Nerd. The AI software winners were probably not born yet. I don't know.
I think Google's a AI software winner.
Yeah, that's the thing, you know, with all of. But then again, Palantir themselves said they don't care about like how many LLMs are out there. That's just a tool. It's the ontology that's key here. So for them, if there are many out there, fine. Advanced money digger. But yeah, I don't know. 10 years from now, things would be looking different.
Now that thing, you got me angry, Neil, because you just reminded me. I thought today was rumored to have GPT-5. We didn't get any update from OpenAI. The reason that kind of reminded me about that is because someone was posting about eventually we're going to see these unicorns be born with like less than 10 people because of AI software and AI solutions. So it's just pretty crazy to see how the market is excited for some of this AI development.
But to counter that, why would you be worth $1 billion if you can do this with just an AI software and less than 10 people?
Yeah, that's true. Boom, boom, boom.
No, it's funny because we go from everyone needs software, but I think the winners will be those with the hardware, because that's less easy to replicate. Manufacturing,
Yeah.
production lines, supply chains. So yeah, a mix of software and hardware is going to be key for the future. But yeah, Meli, this is basically it. They missed on a gross profit margin. They missed on EBIT estimate by 15%. Missed EPS here as well. Let's see if he got something else. HIMSS. So missed revenue estimate, missed subscriber estimate by 2.5%. Guide reiterated. The only miss was annual EBITDA guide, missed by 1.3%. Q3 revenue guide slightly missed, and Q3 EBITDA guide missed estimate by 14.5%. It did say here that large free cash flow margin contraction is driven by a working capital investment and ramping capex. So again, it's one that has been flying quite high more recently. I'll show you where is HIMSS here. Yeah,
And Kevin's saying, good point. Software can't become cheap quick. I guess
Yeah.
Neil just said short Adobe, right? Is that what I heard, Neil?
Short Adobe? No, because they have the ecosystem. They have the ecosystem. I'd say, I don't know, a short whoever is only one solution. Short OpenAI at $300 billion. But yeah, HIMSS was $25 back in April. It was $40 at the end of June, and now we're at $63. So a lot of things were priced in already for HIMSS. You'll have to listen to the call maybe tomorrow when before the market opens. We'll look at an AI summary from Fiscal. Time to sell Meli? Not at all. And I don't plan on selling Meli. I wouldn't say never, but not anytime soon. Not anytime soon. And as you can see, magic. It's right at the bottom of that gap. Right at the bottom of that gap right now. So sometimes
Where is it now?
To 2,270, which is right here before it gapped up back in May.
Yeah. Some might say that this magic works.
Yeah, some might say that this magic does work. Axon is up a little bit. Let's see what they reported.
I see growth until 2099. New analysts start projecting growth.
Axon beat across the board. Revenue, EPS, outlook. What a company. What a company. Crazy.
Is Navitas still down a nice amount?
Yeah.
Yeah. Picked up a little bit, right? It was at 680 last time I think we checked.
I mean, it's back to prices not seen since Friday, so so basically like 1.5 trading days ago.
Yeah. Seems like forever ago.
Yeah. A weekend. Oh, this is a good debate. Agree or disagree?
I don't know. Well, first, let me just say, I don't know if I consider them meme stocks. They're both doing something. But if I had to choose one, and by meme stock, I would guess, what is the sentiment of meme investing? Is it just like retail buying like no tomorrow? Then I would think Palantir has the more, again, not calling meme stock before everybody goes crazy out there, but just kind of like that meme sentiment, I feel like is more in the retail towards Palantir than towards Tesla right now. I feel Tesla has pushed off a lot of people away in the past few months and like the past few quarters.
Yeah, I mean, price to sales wise, Tesla is still cheaper. Of course, one is software, the other is not. One is growing, the other is declining. But it's still, I mean, Tesla is still generating, what is it, over $90 billion in revenue. So I don't think calling it a meme stock makes sense, right? Meme stocks don't generate $90 billion in revenue. Although, yeah, the business is definitely declining at the moment. Margins are not doing great. Free cash flow is not great either. But I don't know. I'd say Tesla bulls are probably more delusional than Palantir bulls.
That's because the only ones that are left are
The bag holder?
the Colts. You know, that's what is those extreme bulls, right? It's the meme phase ran out of it. Those went off somewhere else. Now it's just the pure crazies.
Yeah, I mean, I don't know. It's very difficult to defend a business that's worth close to $1 trillion and is declining, despite, of course, all the future growth potential, right? With FSD, robotaxis, Optimus, and all of that. Plug is a meme stock, yes.
I don't even know what that is.
Is that energy, whatever?
Cool name if it is for energy.
No, I am realistic. I know what I own. Which is why I reduced my exposure. But I'm also not the one saying that, oh, Uber is a zero. Like plenty of Tesla bulls are saying, like, if Tesla is successful, that means that Uber will fail. I don't see the correlation here. So, yeah. Plus, also today I saw a tweet, or maybe it was yesterday, I don't know, of Elon talking about Grok 4 Imagine. It's the best model out there, blah, blah, blah. I'm like, him convincing himself that he's got the best model out there, where when Gemini has been releasing new things and ChatGPT has been releasing new things, is what is going to make Grok not the best model out there. We like you
Grok
as well.
On the Tesla, yeah, we like you as well. Grok on Tesla it's cool though. It's pretty cool to kind of see that kind of entering into the consumer space in a way that you don't traditionally have some form of communication that often. But I thought it was pretty weird. It's like, why would I want to talk to Grok? Can I just call my family instead? But like, you can have a full-blown conversation with Grok now. And the thing, I guess you can research and make it a little bit more productive, but it's one of those ways where AI was never in before. But it can seem pretty cool for users.
You can ask it, for example, set the course for, I don't know, Pizza Hut near whatever, and it does it, or that's
not yet. Supposedly, Grok itself is independently, and it told me that it doesn't know exactly where am I. I call lies on that, and it can't control anything in the vehicle.
So what's the point?
I think eventually it'll be an integration, but it's like you can I guess just ask questions during a long drive. Like, hey, Grok, I need to do research on blah, blah, blah. Can you read me what HBM is for the next hour of my drive? And explain it in a story, right? So kind of create like your own podcast needs. You don't have the podcast where you want to collect that information. It can do that for you.
Yeah, okay.
But I wonder if it makes sense. I mean, I don't know if, I guess on the engineering software layer, you don't want some form of AI that like might have some buffering, be controlling some of your solutions in the car. Because what if you have like some buffering issue and then like
AI is knocking on the door? But yeah, no, I mean, eventually it would make sense, right? That Grok, you can ask it things to control in the vehicle, because otherwise I don't see the point, right? Okay, let me have a conversation with it. But like, if I don't know, if it's truly purely to have the experience of an autonomous vehicle, it's like you enter the car, you say, hey, Grok, drive me to Jose's house. Okay, puff, done. And we're off.
Robert, sometimes my engineering degree pops up out of nowhere and
then disappears.
Yeah. It's limited there, but it comes out.
Where was the funny advance money? Was another good one here for AMD. Advance money beggar or something. I don't know, but it didn't make much sense. Where is it? Where is it? My precious.
This is the negative sentiment that sometimes I feel. I have inner thoughts and deep feelings about Neo. I feel like sometimes the stock could go down tomorrow, but I agree. I think it's a multi-bagger with not a straight line getting there. It's going to be massive volatility throughout the ways, and I still wouldn't mind even if it drops tomorrow. I mean,
it can drop tomorrow even with good numbers. That's the thing.
Yeah, exactly. But I mean, we continue to hear the great news, right? I mean, capital expenditure growing. Companies want to eliminate somewhat their dependency of NVIDIA. We got from Palantir today that enterprises adopting AI solutions, and you have AMD really kind of improving their overall roadmap. And to me, I am still more excited about the MI 400, just because that's the portion where AMD will finally be able to connect a lot of GPUs together. Right now, even with this server rack solution on the MI 350, in theory, they're only really connecting 8 GPUs to kind of do that discussion, where NVIDIA still has the 72 NVL link. The MI 400, I think they mentioned, I forget what was the number. So the MI 400 is the one that I believe could really, really be that multi-revenue grower for AMD.
Now, you see, Open Door is the meme stock. If we have to choose between Tesla, Palantir, Open Door is the is the meme stock here for sure, sure.
So DM, what have I studied? So I did my bachelor's and master's in electrical engineering back in my engineering days.
So what can you build?
Anything, robots.
So what are we doing?
Anything. What are we doing? I mean, it takes a team. It takes money.
Let's build a robot.
Maybe that's my next YouTube channel.
Like a full-on live stream, Jose building Optimus before Tesla.
Yeah, I don't think no. Those are like 100x engineers working at Tesla and all those places. Those guys sleep and breathe engineering.
Yeah, but you can build like those small robots. You know, the robots in a cage, bot battle, or what is it called? Like a small robot going against the other small robot.
And put logos of different the face of different companies, and whoever wins is the one.
AMD and Nvidia.
Yeah.
Man, million subscribers in a couple of months if we do this. Yeah, Nebius achieved the fastest NVIDIA GPU speed on public boards, Llama 70 billion model and the Alibaba Qwen 3 one.
When was this?
Let me pull this up.
That's actually pretty cool.
I think this was released this morning. Let's see.
Aerospace engineer here. Nice. AI Money Rick. AI Money Rick has AI money for real. He's an aerospace engineer.
So, by the way, he's the one that's joining us on Thursday. So yeah, an independent benchmark has ranked Nebius as the fastest inference platform on public NVIDIA GPUs. And Nebius added, and will make your fine-tune just as fast by training a custom speculator for your model. Keep CUDA, bring what is this? LoRa's,
yeah.
Ship, zero custom silicon lock-in. Full explanation is as follows. But the picture is basically this. So Nebius is here on the left. All the rest is lower than them. And this comes from artificial analysis.
Can you
Zoom
I'm gonna look at this. So this is one of the guys joining tomorrow. I mean Wednesday. Thursday.
Yes.
Sometime this week.
Correct. Yeah, not bad. Not bad at all, I'd say. Even though it's Llama 3.3, the 7 billion one, it's a bit older, but still.
I do want to say we are going to be live tomorrow to probably talk a little bit about earnings preview, right, Neil? I think Tuesday morning we
Yes.
might do
Yeah, short one.
earnings previews on AMD, some information. But I'm pretty sure both of us have some videos on this if you want to get our raw thoughts at the moment on that as well.
Correct. I think Palantir's call is starting. Let's see. Yeah, it's starting. If we want to do that.
Yeah, put it on the. I'll probably be AFK, but I have my headphones on.
Yeah, no problemo.
17% sequentially, and now represents 73% of total company revenue. We surpassed $1 billion in quarterly revenue for the first time, as our overall revenue growth continued to rapidly accelerate to 48% year-over-year growth in Q2. Through this record-breaking quarter, our Rule of 40 score continued to climb, reaching 94 in Q2, which is up 11 points quarter over quarter, particularly noteworthy given the scale of our business. As AI continues to relentlessly advance, the market has become increasingly aware of the most important and fundamental technical reality. LLMs, on their own, are at best a jagged intelligence divorced from even basic understanding. In one moment, they may appear to outperform humans in some problem-solving task, but in the next, they make catastrophic errors no human would ever make. By contrast, our ontology is pure understanding, concretized in software. This is reality, not rhetoric, and enterprises are experiencing this reality keenly. LLMs simply don't work in the real world without Palantir. This is the reality fueling our growth. We booked our highest TCV and ACV ever last quarter, with $2.3 billion in TCV and $684 million in ACV. We closed a whopping 157 deals worth $1 million or more, of which 66 deals were worth $5 million or more, and 42 deals were worth $10 million or more. We continue to see expansions with our existing customers, as our top 20 customers now average $75 million a year in trailing 12-month revenue, up 30% from a year ago. The impact our software is delivering for our customers as they cross the chasm is ever widening their advantage over the AI have-nots. Citibank shared that the customer onboarding process and relevant KYC and security checks that once took them 9 days now take seconds. Fannie Mae recently announced they're working with Palantir, decreasing the time to uncover mortgage fraud from 2 months down to seconds, saving the U.S. housing market millions in future fraud losses. Nebraska Medicine president and COO noted they saw a 2,100% increase in discharge lounge utilization, which is the equivalent of adding another unit to their hospital. They even noted, quote, "We've been using the term a Palantir unit of time, and that represents when we're driving value in less than an hour." Lear Corporation recently signed a 5-year extension. Over the past 2.5 years, they have leveraged Foundry and AIP to support over 11,000 users and more than 175 use cases, including proactively managing their tariff exposure, automating multiple administrative workflows, and dynamically balancing their manufacturing lines. Their CEO highlighted that their enterprise-wide adoption gives them, quote, "a first-mover advantage in the automotive industry, which will be difficult to replicate." Our U.S. commercial business exited Q2 with a 93% year-over-year and 20% sequential growth. Due to its acceleration, U.S. commercial comprised 31% of our Q2 revenue versus 23% a year ago. We continue to focus on delivering AI production impact, evidenced by the strength of new starts and expansions at existing customers. We're seeing new starts with higher ambition and existing customers expand their work at a faster rate. A healthcare company completed a bootcamp in April, then signed an $88 million TCV deal a month later to coordinate and automate patient care across facilities. An American telecom company started working with us in 2022 and has increased their contract 10x since then and is now projecting hundreds of millions in cost savings. Our U.S. government business grew 53% year-over-year and 14% sequentially last quarter, driven by the impact we're delivering across civil, intel, and defense, including greenfield efforts. U.S. Space Force Space Systems Command awarded us a $218 million delivery order to support seamless synchronized multi-domain warfighting for the space and air operational communities. The ceiling for our Maven Smart System contract was increased by $795 million to prepare for what they expect will be significant demand from combatant commands for our AI-powered software capabilities over the next 4 years. Last week, Palantir was awarded a 10-year enterprise agreement with the Army, totaling up to $10 billion, consolidating 75 contracts into a single contract. The Army is one of our longest-standing customers. We are honored to embark on this next phase together. We remain focused with deep respect and dedication on equipping our warfighters with decisive advantages over our adversaries. Looking towards the back half of the year, my enthusiasm for our business is at an all-time high. With determination and persistence, we'll continue delivering exceptional AI production impact for our customers, running full speed at the critical challenges they entrust us to solve. I'll now turn it over to Sham.
Thanks, Ryan. 20 years of grinding has built a unique moat and a massive lead. Our products were built for this moment, and the numbers show it. Realizing value from AI in the enterprise requires the elegant integration of LLMs, workflow, and software. And that's only possible with ontology. As LLMs continue to improve, it only further accelerates the value realization, and therefore the value of our products. Our foundational investments in ontology and infrastructure have positioned us to uniquely deliver on the AI demand both now and in the world ahead. A substantial development over the last couple of quarters is the realization and acceleration of our vision of ontology web services as an architectural concept for our customers. AIP isn't just software our customers use, it's software our customers are building their software on. Software companies are replatforming away from the highly unopinionated services and building blocks of the hyperscaler stack onto AIP with its highly opinionated building blocks that get you to value 10 times faster. Chris Johnson, the co-CEO of Teletracking, who recently replatformed on AIP, said that he was flooded with inquiries from CEOs and CIOs when he went public on his partnership with Palantir. Replatforming on AIP has enabled customers to leapfrog their competition and beat them to market. And this will continue to be both a significant area of investment on our product roadmap and an accelerating growth opportunity for the business across commercial and government. I mentioned this last quarter. On their earnings calls, CEOs have been highlighting the transformative impact of AIP on their organizations. That trend continues. But also this quarter, you can hear from the frontline workers about the same transformation AIP is bringing them. AI is giving the American workers superpowers. At the All-In Winning the AI Race Summit in DC, an ICU nurse, a factory worker, a hospital administrator, an electric vehicle battery maintenance technician shared how AI is making them better, faster, and more productive, giving them more time with patients, more time solving problems, and enabling more workers to access the job market. Our investments in AIFD are accelerating the already eye-watering time to value for our customers and providing customers with capabilities to solve bigger and more complex problems independently. AIFD is designed to enable autonomous execution across a wide array of tasks, including creating and editing the ontology, building data transforms, creating functions, debugging issues, and building applications. With its own closed-loop error handling, AIFD can identify and correct issues and notify human users if needed. And it's been designed for seamless collaboration with humans in the loop through integration with AIP's branching. Warp Speed, our modern manufacturing operating system built on AIP, continues to deliver for our industrial customers, from nuclear companies to the defense industrial base. With MRP Speed, a component of Warp Speed, one of our customers remarked that balancing the production line has shifted from 1 day to 1 hour. We have seen a dramatic set of opportunities open up in U.S. shipbuilding as America gets serious about fixing its maritime industrial base. China built more ships last year than we have built cumulatively since the end of World War II. Now the mighty American engine of innovation is spinning up and tackling this problem head on. Maven Smart System met its moment in recent operations of great import. Maven adoption continues to grow, with usage doubling again since February. Last quarter, I mentioned that usage doubled in the first 9 months of 2024 and doubled again in the subsequent 5 months. This is on top of that. With that, I'll turn it over to Dave to take us through the numbers.
Thanks, Sham. We had an unprecedented second quarter, surpassing $1 billion of revenue in a quarter for the first time and delivering our highest Rule of 40 score ever of 94. Q2 revenue growth accelerated to 48% year over year, exceeding the high end of our prior guidance by nearly 1,000 basis points and representing a 2,100 basis point increase compared to the growth rate in Q2 of last year. On the back of this continued strength, in the third quarter, we are guiding to revenue of $1.085 billion, representing over 8% growth quarter over quarter, our highest ever sequential revenue growth guide, and 50% growth year over year. We are also raising our full year 2025 revenue guidance midpoint to $4.146 billion, representing a 45% year over year growth rate, a 9-point increase over our full year 2025 revenue guidance last quarter, and our largest ever full year revenue guidance raise. We are also raising our full year U.S. commercial revenue guidance to an excess of $1.302 billion, representing a growth rate of at least 85%, 17 points higher than the guidance we gave just last quarter. Accelerating demand for AIP continues to drive the outperformance in our U.S. business overall, which grew 68% year over year and 17% sequentially in the second quarter. Our U.S. commercial business grew 93% year over year and 20% sequentially, and our U.S. government business grew 53% year over year and 14% sequentially. We delivered these outstanding top-line results as adjusted operating margin expanded to 46%, exceeding the high end of our prior guidance by nearly 300 basis points. Our revenue and profitability drove an 11-point sequential increase to our Rule of 40 score from 83 in the first quarter to 94 in the second quarter. We continue to generate strong cash flow with second quarter adjusted free cash flow of $569 million, representing a margin of 57%. Turning to our global top-line results, second quarter revenue grew 48% year over year and 14% sequentially to $1.004 billion. Second quarter U.S. revenue grew 68% year over year and 17% sequentially to $733 million. Excluding the impact of revenue from strategic commercial contracts, second quarter revenue grew 49% year over year and 14% sequentially, and second quarter U.S. revenue grew 68% year over year and 17% sequentially. Customer count grew 43% year over year and 10% sequentially to 849 customers. Revenue from our largest customers continues to expand. Second quarter trailing 12-month revenue from our top 20 customers increased 30% year over year to $75 million per customer. Now moving to our commercial segment. Second quarter commercial revenue grew 47% year over year and 14% sequentially to $451 million. Excluding the impact from strategic commercial contracts, second quarter commercial revenue grew 49% year over year and 14% sequentially. We closed $1.1 billion in commercial TCV bookings, representing 185% growth year over year. AIP continues to drive existing customer expansions and new customer conversions in the U.S. Second quarter U.S. commercial revenue grew 93% year over year and 20% sequentially to $306 million. Excluding revenue from strategic commercial contracts, second quarter U.S. commercial revenue grew 95% year over year and 20% sequentially. We had our strongest quarter of U.S. commercial TCV booked at $843 million, representing growth of 222% year over year. Over the past 12 months, we closed $2.8 billion of U.S. commercial TCV bookings, a 141% increase from the prior 12 months, highlighting the demand for AI production use cases. Total remaining deal value in our U.S. commercial business grew 145% year over year and 20% sequentially. Our U.S. commercial customer count grew to 485 customers, reflecting growth of 64% year over year and 12% sequentially. Second quarter international commercial revenue declined 3% year over year and grew 2% sequentially to $144 million. For our international commercial business, we continue to capitalize on targeted growth opportunities in Asia, the Middle East, and beyond, but remain focused on accelerating the growth in our U.S. business. Revenue from strategic commercial contracts was $5.1 million for the quarter. We anticipate third quarter 2025 revenue from these contracts to be between $2 to $4 million compared to $10 million in the third quarter of 2024. We anticipate 2025 revenue from these contracts to be less than 0.5% of full year revenue. Shifting to our government segment. Second quarter government revenue grew 49% year over year and 14% sequentially to $553 million. Second quarter U.S. government revenue grew 53% year over year and 14% sequentially to $426 million. This growth was driven by continued execution in existing programs and new awards reflecting the growing demand for AI in our government software offerings. Second quarter international government revenue grew 37% year over year and 11% sequentially to $127 million, bolstered primarily by our continued work in the UK. We closed our highest ever quarter of TCV bookings at $2.3 billion, up 140% year over year. This eclipses our prior highest quarter of TCV bookings in Q4 2024 by nearly $500 million. Net dollar retention was 128%, an increase of 400 basis points from last quarter. The increase was driven both by expansions at existing customers and new customers acquired in Q2 of last year as we see the effect of the AI revolution. As net dollar retention does not include revenue from new customers that were acquired in the past 12 months, it does not yet fully capture the acceleration and velocity in our US business over the past year. We ended the second quarter with $7.1 billion in total remaining deal value, an increase of 65% year over year and 20% sequentially, and $2.4 billion in remaining performance obligations, an increase of 77% year over year and 27% sequentially. As a reminder, RPO is primarily comprised of our commercial business, as it does not take into account contracts with an initial term of less than 12 months and contractual obligations that fall beyond termination for convenience clauses, both of which are common in most of our government business. Turning to margin and expense. Adjusted gross margin, which excludes stock-based compensation expense, was 82% for the quarter. Adjusted income from operations, which excludes stock-based compensation expense and related employer payroll taxes, was $464 million, representing an adjusted operating margin of 46%. Q2 adjusted expense was $539 million, up 9% sequentially and 27% year over year, primarily driven by our continued investment in AIP and technical hiring. While we expect adjusted operating margin to continue to expand for the second half of the year, as in prior years, we expect a significant ramp in expenses in the third quarter due to the seasonality of new hire starts. We remain committed to investing in the most elite technical talent, as well as a product pipeline and AI production use cases, all while delivering on our goals of sustained GAAP profitability. Second quarter GAAP operating income was $269 million, representing a 27% margin. Second quarter GAAP net income was $327 million, representing a 33% margin. Second quarter stock-based compensation expense was $160 million, and equity-related employer payroll tax expense was $35 million. Second quarter GAAP earnings per share was 13 cents. Second quarter adjusted earnings per share was 16 cents. Additionally, our combined revenue growth and adjusted operating margin accelerated to 94% in the second quarter, an 11-point increase to our Rule of 40 score from the prior quarter, and our 8th consecutive quarter of an expanding Rule of 40 score. With the increase in our 2025 revenue and adjusted operating income guidance, we are now guiding to a Rule of 40 score of 91% for the full year. Turning to our cash flow. In the second quarter, we generated $539 million in cash from operations and $569 million in adjusted free cash flow, representing margins of 54% and 57% respectively. Through the end of the second quarter, we repurchased approximately 2.5 million shares as part of our share repurchase program. As of the end of the quarter, we have $899 million remaining of the original authorization. We ended the quarter with $6 billion in cash, cash equivalents, and short-term U.S. Treasury securities. Now turning to our outlook. For Q3 2025, we expect revenue of between $1.083 and $1.087 billion, and adjusted income from operations of between $493 and $497 million. For full year 2025, we are raising our revenue guidance to between $4.142 and $4.150 billion. We are raising our U.S. commercial revenue guidance to an excess of $1.302 billion, representing a growth rate of at least 85%. We are raising our adjusted income from operations guidance to between $1.912 and $1.920 billion. We are raising our adjusted free cash flow guidance to between $1.8 and $2 billion. And we continue to expect GAAP operating income and net income in each quarter of this year. With that, I'll turn it over to Alex for a few remarks, and then Anna will kick off the Q&A.
Well, as usual, I've been cautioned to be a little modest about our bombastic numbers, but it's honestly, there's no authentic way to be anything but have enormous pride. And gratefulness about these extraordinary numbers. Now, when you're obviously looking at numbers, there's numbers and what do they mean? So if you take, I would say, the truly once in a generation number of 93% growth in U.S. comm off of a large base, or even 53% growth in USG, which is astonishing, even though obviously it shows where the government is downstream from general trends in AI, or the 68% growth in the U.S. You still have to say, why are these numbers even more astonishing than they appear? Well, obviously, you would look at what is the meaning of the number, and the rule of 40 basically tells you the meaning of the number. And if that number is somewhere in the 50s, 60s, 70s, that's pretty baller. When it's the single most impressive number I think any enterprise software company's ever seen, there is something anomalous going on. And obviously, the prediction that all the attendees would be downstream from the value, so it would be chips and ontology, is being proven, not as a thesis, but as a reality. And then you would obviously ask, well, what is the base? We're now working off of a very large base, getting to we did our $1 billion, so it's a very significant run rate. But then I would say, if you look at a kind of more qualitative version of Palantir, we did this with no compromise in terms of what we believe. We still believe America is the leader of the free world, that the West is superior, that we have to fight for these values, that we should give American corporations and, most importantly, our government an unfair advantage. We've demonstrated in every area and arena of American life and international life that we do deliver an unfair advantage for our allies, our friends, and our compatriots. We have done this by creating a company where every single component is value accretive. There are almost no parasitic elements to this company. We have a small sales force. We have very little BS internally. We have a flat hierarchy. We have the most qualified and interesting people, heterodox in their beliefs. We have an orchestration engine that deploys for deployed engineers everywhere, a model that everyone despised and disdained until literally a quarter ago and thought would lead to a low multiple. Guess you were wrong. We have a series of products that are on the front line, most notably Ontology, but also Foundry and Maven. And this is a confluence. This is the perfect time for Palantir. And I would also say, at the risk of saying the obvious, this is a perfect time for a revolution in the United States of America. We are very, very bullish on America. We have some really crucial and important clients internationally, large clients, commercial clients in Europe, and also government clients outside of America that we're proud of. But this is an American revolution. It's being led by Ontology and chips, and also to some extent large language model providers. We are also anomalously bullish on all aspects of American life, including and especially people in the blue collar. Sham and others are leading our charge to arm the working class, blue collar workers with AI agency-enhancing skills. AI is an agency-enhancing revolution. Our numbers show that. We've seen on the front line in the United States government that people with less than a college education are creating a lot value, and sometimes more value than people with a college education using our product. We're also going to reach out to labor leaders and help them organize ways that workers can earn AI-enhanced earnings. But in general, what you see in our numbers, and the reason it's so successful, is our clients and partners are downstream from our unit economics, and they want our unit economics. And we are teaching them ways in which to work, both cultural and with our products, that will allow them to get unit economics that look like 94, 93, 68, 53, respectively. Those numbers are astonishing, incredible, and we're planning to share them with our partners via exposing them to a way in which to work in an AI revolution so that they have the same kind of agency we do. I run around U.S. commercial telling corporate leaders, if you want to have your First Amendment rights to an opinion again, get our unit economics, and then you too can say things that are true in public like we do. It's very motivating to people and very motivating to us. So thank you for all of our supporters, and we should entertain questions. But this is a once-in-a-generation truly anomalous quarter, and we're very proud, and we're sorry that, our haters are disappointed, but there are many more quarters to be disappointed, and we're working on that too.
Thanks, Alex. We'll now turn to questions from our shareholders before opening up the call. We received a question from Christina who asks, beyond just using LLMs, how is Palantir making AI more useful for frontline workers and decision makers, not just data scientists?
Well, thanks, Christina. There's a surprising amount of doomerism that comes out of the ivory tower, the folks who are doing AI research. We spend all of our time at the front line with the factory worker in the fire cell, and the vibe could not be more different. What we observe is that AI is giving the American worker superpowers. Look at the nurses in the ICU who have more time to spend with their patients, less time munging around collecting the clinical notes to understand what care to deliver. Or the factory workers in the submarine industrial base who get back 3 days of quoting a part to actually spend time solving problems in production. And perhaps the use case that I'm most excited about around Panasonic Energy, make electric vehicle batteries, actually being able to develop AI to train their workers to manage this exquisite high-end Japanese technology, where the background of the workers is casinos. And I think this is job expanding. It's empowering. To Alex's point, it's really pro-agency, pro-creativity. And that's a big reason why we've leaned into creating the American Tech Fellowship. Our lived experience is that some of those creative AI applications are coming from the blue-collar worker, the autodidact that has a little bit of self-taught knowledge, not the classically trained computer scientist, not just using AI, but more importantly, building AI applications that are changing their business. We want to find these people, we want to empower them, credential them, put them through the training, and unleash them on the American economy.
Thank you, Shyam. Our next question is from Dan with Wedbush. Dan, please turn on your camera, and then you'll receive a prompt to unmute your line.
Thank you. And I'm sorry also that the haters aren't satisfied, but look, can you just hit on, you're basically doing this without a direct sales force. So like, are you gonna go down that path, or it's just gonna be, prudently going down, just given the type of growth you're seeing? Can you just like walk through how you're thinking about that, just given such the massive success you're having, essentially with no direct sales force?
Yeah, for those of you who are new to Palantir, one of the many, many controversial, we were doomed to failure decisions we made was that we rejected an idea of basically the way software is often done, useless product that becomes parasitic, you can't get rid of it, and you have 1,000 steak dinners all convincing you to buy something is useless, you can't get rid of. And we believed that we would always be downstream from the value we create, and we would be able to capture that value. And if you look how this company is organized in government and commercial, it is all built around those ideas, including internal orchestration, including our flat hierarchy, including the products we deliver. Our primary sales force now, and I think likely in the future, are going to be current customers telling other customers, if you want this to work, bring them in and listen to how they orchestrate their culture inside your culture with their products. And it's not that we won't have direct salespeople, but what's really helping us now is the increased credibility so that people use more of our product on day one, so that they're not using the Foundry product of 3 years ago. They're really aspiring to what can be done with ontology and large language models and our FDE structure. And the disadvantage of this is, you don't have 10,000 people roaming around selling something they don't understand. But the advantage is we go from, once we come in the door, we come in with enormous credibility. So the person we're selling to believes we will make them a lot of money, save them expenses, or we will make their soldiers safer and more lethal. And they believe it because they've heard it from someone they trust, and or in the U.S. economy, there are a lot of people that go from one job to the next, so that somebody we meet in one place very likely will be somewhere else in a year or two. And the first call we get, in fact, I was just doing a customer call, partner call. We're very early with these people. The story was, hey, I got blocked at my last enterprise. They wouldn't let me buy Foundry. I've been following Foundry and now ontology. First call was to us. And then when the meetings have shifted from, hey, we may not know how to use you, to very much tell us how we could create the kind of leverage you have. And that's why these numbers are going up at the top end and at the bottom end, because we're coming in with a different kind of credibility and leverage. So in the near future, the 10x revenue we are going to get in the U.S. Over the next, in my view, next 5 years. But certainly what we forecasted for this year, it's really people saying, wow. I mean, and then you have, and then everyone talks about it on the earnings calls. So like when you see AIG or others saying, I believe I can dramatically change my business at a lower cost. You know, CEOs, CIOs, chief revenue officers, the whole group are like, get them on the phone. And this just makes our whole thing easier because we do not have time or interest in spending all the time we did in the past starting from complete ignorance. We're starting from a much higher level, and then the higher level allows us to ratchet up. So that's going to be what we're going to do. Obviously, we're going to continue. Samir and others and Cam have built a very small, nimble sales force. We have people who've been here for a long time doing very large deals. We have Ryan, who's doing this, organizing the contracts full time. But I mean, I'll let Ryan speak to this. The leverage we have in these calls, I don't mean leverage just financial, the leverage to create the value that is upstream of what we get paid. We are very focused on the value creation and then collecting later.
Yeah, and what we're seeing is like the leadership of our customers are coming to us saying, how do we're seeing it start more quickly, expand more quickly, and expand deeper. And they're coming to us now at the beginning saying, how do we roll this across the whole enterprise?
And they're willing to be more experimental because, you know, we were at a big customer and it's like, look, we'll do this in this side of the contract. Why don't you let us do the rest and we'll just see the value, you know, see the value. We'll discuss it later. Yeah. And then this is yet another advantage America has that we underestimate. It's so plastic. If you compare America to, say, Germany, the way in which they build industry, they purchase software, they judge software, there's a pattern that is etched in stone there. But in America, people are very open to value creation, and they're under more pressure. And also, people inside the company have more upside in the company. They have more equity. They want things that work. They don't want theory.
Thank you both. Our next question is from Mariana with Bank of America. Mariana, please turn on your camera, and then you'll receive a prompt to unmute your line.
Good afternoon, everyone.
Greetings.
I have two questions. One on the AI action plan that the White House put out a couple of weeks ago. You have been part of this process through recommendations. What excites you the most, and where do you think there is still work to do? And the second one is about talent, because to make sure that you are part of the dominant software of the future, you have to make sure that you keep attracting, retaining, and training the right talent. And we are seeing this, battle over talent in software companies right now. How you make sure that you are ahead of everyone else and keep attracting the right people?
On the first bit with the AI action plan, I think it's incredibly exciting. Essentially, we're taking all the brakes off. AI really is an empirical journey, and you have to roll up your sleeves and actually focus on the implementation of it. It's a clear recognition that having an American open AI tech stack that we all build our solutions on is absolutely crucial and important, and that perhaps we had been spending too much time hand-wringing and not enough time doing things. So not only Palantir, but I think the entire industry and the customers of the industry are really excited to get to work and to realize the value that we can have by doing this and the support and the subsequent follow-on investments that this implies. And on the talent side, I think the most important thing is giving people access to problems that matter. We've seen our retention be quite strong. There's really no other place. So you think about the number of production workflows that we have around AI. There's a set of folks who like to just do research, who like to just think about what is possible. But at this point, we are able to attract and retain and motivate people who actually want to bend the arc of history here, work on the problems that drive outcomes.
This is what Shyam's saying is so right. Part of the value of doing these calls is like, if you are a highly talented person and would believe that the West is superior, or at least tolerant of me telling you it every day, you will not find a place anywhere I've seen. And now over 20 years, I've interacted with almost every agency in the West, many of the largest companies, many of the smaller companies. You will not find a place that is comparable on time of joining to full agency like Palantir. We have this, and by the way, we're ratcheting this up, like more internal orchestration. You come here, from the time you come here to the time you're working on something that literally will be in the paper in the economic section, in the consumer section, or in the government section of the paper, it could be 3 months. There is nothing like that, A. And B, now that everyone knows this, this is by far the best credential in tech. If you come to Palantir, your career is set. And the other thing that is not exactly related that I really just love about that, if you did not go to school, or you went to a school that's not that great, or you went to Harvard or Princeton, Yale, once you come to Palantir, you're a Palantirian. No one cares about the other stuff. They don't care what your parents did. They don't care how rich your parents are. They don't care where you went to school. They care about, were you at Palantir? How are you viewed at Palantir? What did you work on at Palantir? And so we are making a new credential independent of class and background at Palantir that is the most important credential in tech. And that's one of the two reasons, agency plus that we are doing very, very well on the talent acquisition and retention side.
Thank you both. Alex, as always, we have a lot of individual investors on the line. Is there anything you'd like to say before we end the call?
Maybe stop talking to all the haters. They're suffering. You know, don't tell them about how important the ride has been, how exciting it's been, how much you've enjoyed the ride, how much fun it is to send to write little emails to analysts that spent 20 years learning about software and have been wrong about every quarter. Maybe just don't talk to them. There's some suffering going on. But for the rest of us, we are enjoying this time and we're enjoying it with you. And our performance and your support of it is both important because you deserve it. And we are grateful that you gave it to us, especially, and I definitely have not forgotten, there would have been no DPO. We would not have gone from our low share price to now. We would not have many of the clients we have, and we wouldn't have some of the pride we have without you. But I would also say our ability to win while sticking by what we believe is important for the world, because we live in a world where people are purveying half-truths, partial truths. Palantir gets attacked just because we help make this country even better, because we support the values, because we defend it. And, you know, us being able to win while having an opinion does have an impact on the world, if only because the people who think we are wrong or not good have to be a little jealous and suffer. And you know what? That's a good thing, too. So I'm very, very proud of this quarter. And by the way, obviously, to all the Palantirians who made this happen, you know, behind the scenes, we are just, to use Shyam's term, grinding. Every day and all the time on our most important things we're working on. And, you know, we've had deployments here that because of their criticality, our people are working around the clock for half a month, around the clock on a cycle. And they're really proud to do that. And they have changed the arc of history. And your support inside the company and outside the company. And also, we're asking people to work in an environment when they come in here that is very different than anything they've ever worked on. You know, they most of them come from university where they've just been engaged in platitudes. Now it's frontline where things matter, and we do things very differently than anyone else. And the fact that Palantirians have aligned to do this, to work as a phalanx in the service of what I view as a higher purpose, and I think many agree with me, is an enormous accomplishment. And you know, especially I speak for all of us who work with these people. This is a very special environment, and I'm super proud to somehow ended up being your leader. So, thank you.
Thank you. That concludes Q&A for today's call.
As I said, much better. The shortest.
Were we off?
Yeah, the shortest earnings call. Only 2 analysts ask questions. Dan Ives in the bathroom as always, and then Mariana. For once, her mic actually worked.
That's wild. I mean, to only have 2 analysts asking
a company worth $370 billion.
Yeah.
Question. Yeah. It's crazy because on their website, let me pull this up.
I'm not gonna lie. I wish some of my companies kind of had leadership being as direct as
Yeah.
we see here, right? I mean, obviously, there's a lot of companies that just I don't know. I mean, I guess old school is pretty much right. You have to say things certain ways.
Yeah, but when you deliver what they delivered for the last couple of quarters, I guess you can say whatever you want. But look at this on their website. If you go to analyst coverage, there are more than 2 analysts covering this company.
Mm-hmm.
And yet only 2 dare to pop up during the earnings call.
Do they not invite the others, or do they like exclude them?
I don't know. Probably
That's interesting.
some bearish analysts just don't get invited to the call.
Yeah.
But yeah, other than that, I don't know. It's quite strange. To close it out, quick look at the stock.
And anything, Neil, that stood out to you? I mean, to me, again, I'm not a huge Palantir player, but I look at it more as the AI ecosystem. They mentioned one of the biggest reasons they did increase kind of their guidance was because of that commercial AI. The commercial U.S. commercial market is seeing a nice growth rate. I think they mentioned 17% points higher than what they guided for the full year, just versus last quarter. So they're seeing a huge demand there in the kind of commercial side, which I think is a great indication of AI markets still growing dramatically in the enterprise space.
Yeah, I mean, I'm not surprised. I mean, especially not based on the numbers that they've put up right now. Navitas still 6.9, very nice. Palantir up
Very
3
nice.
4%, 3-4% or so. Meli, I think, is still the same as before. Yeah. We'll cover Meli and maybe him's reaction tomorrow before the market opens, so we have time to actually read the transcript and go over the comments from management. But tomorrow before the market opens, it's going to be a little AMD preview.
Yeah, and I wonder, Neil, I saw AMD was up about 1% right now, and Nvidia was up about 0.4%. Do you think this? I don't know if you saw anything, or do you think this is just pretty much what I was discussing a little bit ahead, where it's like it just shows the excitement for AI in the enterprise side?
Yeah, or it's just continued strength from both of those stocks, because both of them were up a nice amount today. Not crazy amount, but a nice
But for
amount.
AMD, 1% is definitely it was up 3% and an extra 1%
Yeah.
after hours. Yeah,
I mean, a lot of anticipation. That's the thing.
Mhm.
So many good things going on with AMD right now that tomorrow they have to deliver.
They have to deliver and double deliver.
Yeah,
and not ask for tips.
20%.
I don't know.
Chat, did Palantir deliver? I think they did, and then some. And then some. Are we Coucharians? Could not bad for a cult. Not bad for a cult.
It seems like actually they made a deal with for AI. I haven't.
What does that mean?
Listening to
AI
the
or?
This is selection IP. There's something that there's a company called AIP. Arthuri's stock surged 45% in after-hours trading after the semiconductor system IP provider announced that AMD has licensed its FlexGen network-on-chip interconnect IP for next-generation AI chiplet designs. So there's some semiconductor excitement there. I'm going to have to a lot of tech words there that we're going to have to look over later.
But not really something that would
I mean,
move the
it seems
needle
like it's
tomorrow.
more just, it's just, I got to find these like random small semiconductor companies that are going to get bought out or partner with these AI players. There's a company that was 396 million market cap, and now it's up about 50%.
Yeah. Huh. I guess AMD has now the power to pump.
Yeah, I was actually looking.
That's
Neil,
the
as kind of
biggest
like
bull sign.
Google, like Google Trends. Google Trends AMD right now is getting more searches than Nvidia. At least in the past 7 days. It could be because of earnings, but still.
Very nice. You know the Jack Nicholson gif, like you say. All right. With that, what is this evil laugh you have there?
Oh man, it's after hours. Evil's okay.
Yeah. So we'll be back tomorrow morning, 8 a.m. Little AMD preview, some answers for MercadoLibre and HIMS, and then tomorrow after the close, full focus on AMD. We'll do a little bit of super micro before AMD call starts, and I think that's about it for tomorrow. Maybe there's one extra company reporting. Open Door, I think, yeah. Let's actually double check that.
Yeah. Open is definitely.
Yeah, Open Door, Arista Networks as well. So we can check that before
Astera
AMD.
Labs, Snap.
Ooh, Snap. They will crash Meta.
That used to be a thing, right?
That
Eventually
used to be the
became.
thing. Yeah, that's crazy. That's crazy.
All right, guys.
All right.
I'll see you guys in the morning.